Instagram or YouTube if you're on there, and scroll down to where it says the 17 steps. Let's type it in over here. Hold on. The 17. If you go to this, it's a little thing I started and then had some problems, had to stop. But this is like my email newsletter, the 17 steps to the science of getting. What I'm going to do, it's going to be these emails will drop like normal, but there'll be some. It'll either be a video or audio, sometimes both. And I'm working through the book, The Science of Getting Rich, which is has really, really, really helped me in my trading, my life, the way I manage money, the way I see the world. Sometimes when you hear me say things, you're like, well, I don't like, why did he say that? It's right out of this book, man. It's helped me. You may not agree with everything, but it's helped give me focus and direction. Chapter 12 is about efficient action. You must use your thought as directed in previous chapters and begin to do what you can do with where you are. And you must do all that you can do where you are. You can advance only by being larger than your present place. No man is larger than his present place who leaves undone any work pertaining to that place. The world is advanced only by those who more than fill their present place. In other words, you come in early, you stay late, you do some work for free. And the universe has to open up a space. So whether that be with trading, if you dedicate yourself to trading, you study, you do all the parts you're supposed to do, you trade with an expectation of proficiency, the universe will reward you. It just takes time. It's the same in the real estate world. One of the things you'll hear me tell people is like, listen, I don't give a fuck how much real estate costs where you live. That's bullshit. And when I ask people, how many houses have you walked? I mean, physically left your home, met with a realtor and walked through the house and looked at jacked up houses. Often they'll say, well, none. Then you can't tell me it's too expensive because you've never actually even been to one. You're just looking at them online. That's not the price they sell for. Okay? So if you actually leave your home and you start walking properties, what happens is you open up the universe to give you deals that weren't necessarily available. This is what happens. And this is, if you talk to any person who does real estate, they will tell you about crazy deals they've gotten out of the blue. Why? Because the universe gives them to you. Call it what you want to call it. I use the term the universe. Same in trading. Some of my greatest trades have come just randomly reading through Barron's, and I see something that opens up, and then I start reading it, and then I look at this, and next thing you know, I'm looking at that, and I find this cool chart. It lines up with the money flow. I buy it. I make 300%, and it was because I was reading Barron's last night in bed. That is how the money flow in the universe works when you're open to receive. And it happens in trading stocks. It happens in real estate. It happens in sales. It happens in all areas of your life. You know, some of my greatest returns, I've talked about this in this, I'm going to talk about this now in dividend. We're going to talk dividends today. Some of my greatest returns have been literally just sitting in a place and everyone else is focused on their kids or what the prices are or whatever other bullshit is in their mind. And I'm just watching the salesman. You want to watch masters at work, go into the Apple store. Like they stop you at the door. Hold up. You got any money? Like, I mean, their sales process of taking you from the door to out the door is amazing. And they make an amazing amount of money. So it's kind of a no-brainer investment, right? So as you begin thinking like this, like instead of reading an art that malls are dead, like go to a mall, like go to these stores, look around, pick up the products. Like you're at work, like why are we buying these tissues? Who makes these? Like as you begin to do this in life, I'm telling you, these deals will come to you. These houses will come to you as you go around, insert yourself. If I'm driving down the road and I see someone remodeling a house, I'll pull over and go inside. Hey, what's up? Name's Gerald. I remodel houses too. What are you doing? And you'd be shocked how many people I've found that do drywall or do painting that end up doing stuff for me or find me a house or tell me who the landlord is. And then, oh yeah, by the way, I think they want to sell it. I mean, I can't just inserting yourself into life is instead of watching it or just having some reason, well, they're too expensive. Like, no, 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 no. Push yourself in there and the universe will open it up, man. So when you start dividend investing, and some of you, if you're just hardcore trading, you're probably going to tune out right now. When I first started dividend investing, I kept it super simple, man. I'd read about the dogs of the Dow strategy. And this is a simple strategy, right? And if you go to dogsofthedow.com, I think that's what it is. Yeah. This guy must make a ton of money just having this website, I think. And this is in my free ebook. This is really how the money flow started coming about. I was doing other trading strategies, and there's a bazillion ways to trade, okay? And it really came about when I began observing my dividend stocks falling into stages. And at the same time, I'm reading Stan Weinstein talking about the 4 stages of price movement. I'm reading, I'm trying to day trade, and I'm trying to do this. I'm trying all these different things. Nothing's really working. I'm fumbling through this stuff, right? Call it falling forward fast. That's the process everybody goes through. And you're going to latch onto something. And it may not be what I do. You may just take one thing from me and go do something else. I caution you of hopping from thing to thing to thing to thing. At some point, you have to find a thing. You have to stick with it to see if it's going to work, okay? But the dogs of the Dow is a very simple, let's find current doggishness. It takes the 10, you got to get past these stupid ads, Jesus. It takes the 10, I wish I could buy this site just to turn the ads off. I should create my own. Like, I bet this wouldn't be hard. If you're in the Money Flow Trading Society and you're a programmer, I bet this wouldn't be hard for us to do this. So if you look here, it takes the 10 highest yielding Dow stocks. There's only 30, and 10 of them are the highest yielding. Now, if you know the way this works, the higher the yield, lower the price, right? So the lower Chevron goes, the higher the yield if you were to buy it today. Don't let that confuse you. Don't let that confuse you. So if a stock is $90 today and the current yield is 5.4%, that means if you put $10,000 in, you'll collect $540 at the end of the year in dividends. If this stock drops in half, the dividend will double. In other words, if I paid $45, I would get a 10% dividend. So the dividend yield will go up and down with the price of the stock, right? So this strategy tracks the top 10. So look, Chevron, IBM, Dow, Walgreens, Verizon, Cisco, 3M, Merck, Coca-Cola, JP Morgan. So these are the top dividend stocks. Every one of these will pay you a little drip to own them. Let's say you don't have that big in an account and you're trying to start a dividend portfolio, which I think everyone should have one. Everyone should have a buy and hold account. Now, you could just do it in index funds. That's fine. I find if you're a trader, stock picker, you're open to the world of investing, you're going to get real bored with an index fund, and you're going to start seeing value, and you're going to want to try to outperform the market. And so you're going to notice, wow, Chevron's on sale, and you're going to want to buy a little piece of that. What this strategy does is it narrows you down to a group of stocks. And if you notice, there's some called the small dogs, which is Dow, Walgreens, Verizon, Cisco, and Coca-Cola. Those are the 5 lowest priced of the 10 highest yielding Dow stocks. So we have further selection, lowering them down even smaller. And so you would buy 5 stocks. And the way the strategy is, you would just take your money, say 10 grand, and you would put 2,000 in each of the 5. That is it. You do nothing else the entire year. And this strategy over time has outperformed the stock market. Why? Because these are the stocks on sale. So when people go looking for value, they tend to go, well, what was cheap last year? They buy that and it catches up. At the end of the year, there's going to be a whole new list. And the ones that aren't on the list, you sell them, you take that money and you buy the ones that are on the list. And this portfolio revolves and grows over the years, right? Well, as I began watching that, a lot of times I'm like, well, shit, I don't want to sell this stock. I like that stock. So I would put in new money to buy the new ones. So whenever the new Dow stocks come out, the new dogs, I don't typically sell the old ones. I may sell some so that I get some money, but then I add new money. And that's one of the ways that I grew out my portfolio over the years, right? I would keep the winners. Like one time McDonald's was on here. It's $220. It ain't on here anymore. But I kept the stock and I put new money in to buy the new one. Well, what I began to notice is I would watch. Let's pull up these dogs. What's another one on here? What do we got? IBM. Let's pull up IBM. What I began to notice is, wow, as I was building out the money flow, if I just, instead of buying it all at the beginning of the year, I could do that. But throughout the year, if I started targeting and using my trading strategy of when to buy more shares, so I'd buy a little more here and I'd buy some on the breakout. And then if it ran up real high, I would do this, And now don't do this if your account's tiny and you're selling one share. Like that's not worth doing. But as this thing would run up and I would have this nice little gain in there and the RSI would go extreme, I'd shave a little bit to add to one of the other dogs that was on sale. And this is kind of how I began to refine the money flow trading system, was around my dividend stocks. And here's the thing, let's say I would add on the breakout and it would just take a dump. Okay, I don't sell it. It's in my buy and hold portfolio. I have those shares. And it would go down and down and I would just keep watching and I would scan all 10. I would just scan them and I'd look, is there any that I could shave? Right? So let's pull up the dogs, the Dow. And I every week, every month, however you add money to your buy and hold account, I would put cash in there. And then I would just watch them and I'd scan them all. And I would go through the list and let's say I got $600, right? Like right now I got $600 sitting in my IRA. So, and I have all of these in there. So I'm scanning. Are any of these on sale? Nope. That was my chance. Last time we bought Cisco was down here. There was your breakout day, bought a little there, haven't touched it since. What about, nope. But guess what? I could shave a little Chevron to add to my $600, right? So maybe I sell 2 or 3 shares. I bought some down here. So now I got a little more cash, right? And as we go through, that one's close. And so as I go through, I would be working these dividends, allocating money to the ones that were doing the worst and shaving some of the ones that were doing the best when they would hit the RSI. And so I was basically watching the two extremes of the low and the high, but also being aware of the 4 stages of price movement. And again, I was doing this in my buy and hold, and then I'm like, shit, why I should be trading? Like, why is this is because it was working so well in my buy and hold. Again, I don't think you should do this if your account balance is super small in your buy and hold. I think you should just put money in there, let it grow. Yeah, buy stocks on sale, but don't worry about selling them when they run up. Do that when you start having larger and larger positions. We're going to talk about that. Hold on. Let me show you an example here. Let's, most of these numbers are hidden, but just in case. We got some hackers on here. So if you look through, red day, huh? I don't even really check the markets till about 10 or 11, man, to be honest. I'll look at charts sometimes, but so if we look on here, where we got Pepsi, was it 14,966. So Southern Electric was my highest balanced stock for a minute there. I just recently sold 20 shares. And the reason I did that, let's pull it up, is if you look over here, Southern had run up really, really high, in my opinion. So if we back it up, I could do a little more research besides just a daily. And look, we're really pushing up to like all-time highs in a utility company. These are electric companies. These are not growth stocks, okay? And they've had a hell of a run. Well, down in here, I bought a bunch more than I wanted. Why? Because the utilities were on sale. If you follow my newsletter, the Peters Report, I was talking about this. They're cheap. So whenever a sector is cheap, I try to buy more than I want to own so that when it is no longer cheap, I can sell a little bit, generate a little alpha in my buy and hold portfolio, take those profits and roll it to something else that's cheap. So where are we at? So I sold 20. My core on this is usually about 200 shares. So I've still got a little bit more I could sell. I mean, they're apparently still going up. What if I get it? What if I didn't get all of it out and it comes back down? It's no big deal. It's no big deal. I got a lot of others that I can do it. So if you begin to, it's like almost like stress-free way of trading. I already own these. They're already buy and holds. So let's say you totally get it wrong, and like here's one recently, HBI. Let's see. So I've owned this since January of 2018. Let's pull this up. So since January of 2018, what was the price in January of 2018? Why was I buying this stock? Let's see. Let's go to a monthly. Let's see. About where we are now. But it had, in my opinion, had come down real low. And obviously I was wrong. It kept going lower. And then in March, look what happened. We got blasted, right? So a lot of this was supply cost issues, China putting pressure on the company. You know, it's not a high moat business, right? They make underwear, t-shirts, things like that. But they got a nice dividend. So I began accumulating that stock. If you go through here, let's see, when's the last time I was buying it? I bought on 11/9, I bought 51 shares. Some of that was I sold a little bit of Southern. Let's see. What day is that? 11/9. Oh, right there. So, right here. How did I know to buy right there? Looks like the damn bottom. Maybe that was the bottom, but this was the bottom, right? Look what I'm doing. I'm waiting for the tick. I'm on the extreme, right? What am I doing there? I'm buying stage ones, man. So I bought 50 shares. I didn't buy 50 shares here or here, right? I bought it when it went to an extreme. So now it's ripping higher. I could add some more. It's still a stage 2 breakout. Once this moves, I'm done. It may be another year before I touch this stock. So I had 51 shares. That was $700. Some of that was shaved money. Some of that was money, brand new money that I put in. Let's look back. When else did I buy some? So that was a dividend. Those just hit your account whenever, right? So when was the next time? Okay, I bought 42 shares on 6/29. Let's see what's going on 6/29. Wow, what was that in? Was that August? No, July. January, February, March, April, May, June. So June 29th, I bought shares. Right there. Just started to tick over. If we back the chart up, we were at an extreme, or we were at a support zone. We hadn't hit an extreme on the RSI though. But look, I mean, I can't see back here what I was looking. I'm assuming it was the support zone. It's the only reason I would have been buying there. Again, pretty low, right? Not up here. I wasn't buying here. So if you'd asked me, Gerald, should I buy this here? No. Why? Because I'm not buying there. I'm buying down here. I'm buying down here. I'm trying to buy lows, not just buy, right? So I'll buy this thing when it's on sale. If it's not on sale, it just sits in my account, pays dividends. And I'm sure we can just keep going back. On 3/19, I bought. And if you look, on 3/19, what? Those shares are up 60-something%. So I'm just targeting when I'm buying. And then I stopped buying. And this goes for years, right? Let's take that. That's only a 2-year-old stock though. So if you go through all of these, you're going to see me doing that. On MO, I'm buying 1 share, 3 shares, 10 shares. Why? Because it was on sale. It was a stage 1. And so as I put money in here, if you look, I have $18. So I can't do any buying right now, right? I got 18 bucks. So to buy anything, I got to put money into the account. This is a SEP IRA. It's a SEP IRA. Or I got to take profits on something. So Iron Mountain is a new position that I just started. And I typically start them with about $1,000. And over the years, if you notice Raytheon, I started 5-6 months ago? Started with $1,000. Now it's at $3,000. And over the years, now sometimes I'll buy the SPY. If it's cheap, I'll just dump money in there. Let's say none of my stocks are cheap, but the SPY's cheap. I'll just dump money in it. And then I'll pull off of that to buy stocks if a stock comes on sale. So FE is one that I'm building right now. It's way undervalued. It's undervalued by like 70%. It's on extremes. See it? So it's hitting extremes now. So I'm letting this stage 1 develop. Now we've dropped into a pretty steady downtrend. So I'm going to let this thing just keep going down. Eventually it's going to start to go sideways. I'll start buying shares. And this will play out year after year, day after day, decade after decade. And you'll die an old man with a lot of money. So let's see. Delta is one that I had cut when it ran up, and then I put it back on. And the reason there's no dividend, I don't like having stocks with no dividends. I don't necessarily cut them because they cut the dividend. I'd gotten completely out of Delta on the last run up. And when it came back down, where did we buy it? Where did we buy this? This is, we can't even see it on the chart, 519. Yeah, so we're up 50. Again, I rarely take trades inside my buy and hold, but I will if I believe the dividend will come back or it's a dividend stock. I will take trades inside of my buy and hold. What I'm not buying in my buy and hold is a penny stock. Like, I'm not doing that. That's in a trading account. So that when I log into this account, it's a different mindset, right? So over here, I'm not really trading. I'm managing money. It's a portfolio management of money. So like, how much money do we want to allocate to Gilead? Gilead's one of the few that are on sale right now. So now I have an opportunity to build this, right? This is stage 2, possibly stage 1, going back into a stage 1. So this would be on my build list, not the ones that are doing good, right? The ones that are doing bad. Make sense? So FE would be on my buy list right now, Gilead. So in my buy and hold, I'm buying the worst stocks, the ones that have done the worst. In my trading stock count, I'm wanting to buy stocks that I think are about to go up. That's called trading. You see the difference? And it's a different mindset. And some people get hung up and they kind of hybridly mix them and they get all twisted. And you need to know the difference between flipping stocks and buying and compounding dividend stocks. And the way you would manage that portfolio would be different too. I don't sell these into a sell-off. These are dipshit people that try to protect their, now you can buy protection, but, instead of buying protection, if you just learn when to buy, you don't need to spend any time worrying about protecting your buy and hold. It's dumb as fuck. There's no reason to do it. There's no reason to get out of Pepsi because the stock market's going down. It makes no sense whatsoever. There's no reason to sell your rental properties because there's a housing problem. And I don't, when I got free from all of that nonsense, that a buy and hold is actually what it says. You buy it and you hold it, and then sell-offs are a gift. Crashes in the market are a gift when you're a portfolio manager. And if you start to see yourself that way, like I'm managing, like if you owned the entire business of Intel, you would never come home and go, well, honey, I'm selling the whole business. You would never do that. You own Intel. So if you start thinking of yourself as like, okay, I'm in the business of owning businesses, then you don't make stupid decisions like that. Now, that's not trading. We could go to the trading and we could trade the volatility of the S&P selling off. We could buy the VIX. We could short with puts. We could buy, we can do all of that, but that's a different game. And so it's a separate business. Just like buy and hold is a business, flipping houses is a business. But there is nobody on the Forbes 500 list that flips houses or that's a wholesaler. Nobody. The people on the Forbes 500 list buy and hold real estate because that's how you get rich. People there's very few traders, in the classical sense that most of us are trading that are on the Forbes 500. There's portfolio managers, there's hedge fund managers, and they may do some trading inside of that, but most of them are they're buying and holding, even if their strategy is slightly different. There's no day traders on the Forbes 500. There's just not. Maybe now there's a couple quant funds or something. Maybe there's a few of those, but just talking about individual people. So it's really, what about REITs? What about them? I don't own a lot of REITs because I own a lot of real estate. A lot of people ask me that. Why don't you have a lot of REITs? Because I own millions of dollars in real estate, and REITs are real estate. So you want to balance your portfolio. So if you work at a job and all of your money comes from that one place, you might not want to have all of your money in that company stock because it could be catastrophic for you, right? So you want to start thinking of your life as a owner of assets. Like you're a manager, you're an asset manager. How can I make the most? But at the same time, I got to protect myself, right? So yeah, that's why I don't own a lot of REITs because I'm already in the business. I do own some. I don't do yesterday's lesson in boot camp on MAs is my favorite video. Cool. I appreciate that, man. I felt like I was babbling a little bit, but we'll do some more on the, it's going to take me probably another video or two on the moving averages. A lot of people use them wrong. They're trying to use them as triggers, signals. That's not really how you want to use a moving average, It's really about where's price in relation to the moving average and what is price, and also what stage are we in? Like this is still a stage 2, even though it's under it. I had a lot of people wanting to sell. We'll talk trading in just a second. Wanting to sell SRNE. The only reason they're wanting to sell it is here, and I notice this a lot. I see this in people a lot. So listen to what I'm about to say. If a lot of people are thinking this way, it's a very common problem. If the market is breaking, and this is even in the Money Flow Trading Society, I get this. We could have 40 trades open. 38 of them are positive, and they want to know about the 2 that aren't. Like that's what they're worried about, the 2 that aren't. And it's like, well, there's no such thing as 100%. Hello? Like not everything's going up. Like you're not going to get it completely right. If you got 18 of 20 trades right, you're doing pretty damn good. But this went down below the 20, and people are like, well, what about this stock? And I'm like, what about it? Like we're still on the trade. Like, so when I'm asked that, I'm like, you need to start the boot camp over. Like you're asking me a question I covered 100 times. Like our stop was over here. So what is the question? Like, I don't personally know why it went down, if that's what you're asking. Like, I don't know. Taco Tuesday, a guy at the trade desk at whatever decided he didn't want to own this. It could be that simple. Like anything can make a stock go down. It could just be a guy who says, fuck it, I don't want to own this anymore. And he owns 10 million shares and he dumps them. That's it. You get stopped out of a good stock because one dude decided he wanted to hurry up and go to Taco Tuesday. And boom, you're out. I mean, so this was the breakout. this is our stop. There's nothing to question. It hasn't hit our stop. That's it. So if you're questioning that, you failed the boot camp. Like, I don't know how to make it any clearer. It broke out, but it hasn't run up. We wait. You're getting a chance to buy it again. Look, now it's come back above the 20. What's that tell you? It's bullish. Our target's here. Our stop's here. There's nothing to question. But what people will do is, well, everything else is going up. Why isn't this going up? I don't know. Nobody knows. You get what I'm saying? I don't know. Nobody knows why people are buying. Some people aren't. I mean, it could be any number of things. So careful of that, because this could be once everything else runs up, guess what? People go look for the ones that didn't run up. And now what? Now this is where you're managing a portfolio. So you're selling the ones that went up to roll the profits into the ones that haven't gone up. So in order to do that, you need stocks that haven't gone up. Like, I don't understand the confusion there. Another one was, let's see, where's Rocket Mortgage today? Still holding that 20. This is another one I got. People are wanting to get out. It's like, dude, please don't. I can't take, it hurts me mentally. It really does. When the stop is 19 and it hasn't hit the stop and they're like, what are we doing with this? It hurts my brain. It's like, what do you mean, what are we doing with it? Like, we're holding it. Like, you could be adding right now. The stop has not been hit. Like, this thing could easily rip. Like, it went down, it came back. That's super bullish. Like, I've said that a bazillion times in the course, that if something goes below and then comes back, it's super bullish. Super bullish. So, does that mean, I don't know, man. I don't know. So if you're properly position sizing, and this is one of 20 trades, and let's say you got $2,000 in this one, 2,020 others, one going down, and it hasn't hit your stop, shouldn't even pop on your radar. Like, I don't even notice it. The only reason I notice it is someone brings it up to me. My stop wasn't hit, target wasn't hit. I'm on to other things. I'm not really thinking much about it. You know what I mean? DraftKings was another one. It's like, that's probably up today. Look at that. Look at that. It's almost like I've done this before. The reason this little sell-off happened is this went from here to here really fast. And so they pull back. That's common. That's normal. Would I buy in here? No. I can't buy in here because I trade precision. If I didn't buy down here, I'm not buying up here, okay? I fully expect it goes to $65 or $85. And you say, well, why don't you buy here? Because I buy here. You could buy here, but that's not my trading strategy. So I would tell you, you need to be more precision and watch it better. Again, you could have bought it here and rode it up. I can't do that because that's terrible trading. I mean, you're chasing money, and that's a terrible strategy to chase stocks. You should be following stocks, not chasing stocks. So just like I did where I was talking about with dividends, I'm just following those companies. So when Intel gets smashed, drops 20%, it doesn't even occur to me to get out of it. What occurs to me is to watch it, wait for the stage one, and start buying more shares. Like, it never occurred to me that I would sell the company. I'm like, cool, I get to buy more. Because the down moves are always too far, and the up moves are always too high. And so inside of that, we get to play the 4 stages. And if we're smart and we're precision, so look, breakout, pulls back, look, didn't hit our stop. So on the breakout, look what happened. Nothing. This was one. I had a lot of crying. We ain't going nowhere. Went sideways for months. Dipping down below the 20. Never hitting our stop. Never hit it. And then it just rips for 70% move. So what are we doing in here? We're waiting. Every time that thing came back above the 20, you could have been adding to that. So what do you think I'm thinking about Rocket Mortgage? Same thing. Now, if it breaks it, I change my mind. It's different then. Then it's a stage 4 decline. Rules are different, right? So, precision. Same reason we didn't buy here or here or here. People were trying to buy that. Why? Man, they're trying to buy it. They're trying to buy a winner. But that's not how you buy a winner. You got to wait for it to stop. Put in a couple days. I mean, it hadn't even put in two consecutive positive days and people were trying to buy it. What is that? That's chasing. That's when you're chasing. It wasn't even over the 5-day moving average and people were trying to buy it. It's chasing. Boom. That was our day. That was our day. Stage 2 breakout, then there. And now we're about to be rewarded. First target is what? $51, I believe. It's right around here. So precision trading, right? Like we don't want to chase. We want to dominate, not chase. And there's so many stocks that you can follow and trade that you never need to chase a stock, you know? You don't need to chase NIO or you don't need to chase any of these stocks, man. There's a girl on every corner. It's like a house, you know, people get house fever. There's a house on every street, man. Like there's no need to get overly excited about any one stock or any one house. Come on, man. Why are you showing us RMG? Are you bragging or complaining? So what are you doing with this stock, man? Now that you interrupted us to brag about your stock here. So look at this. It's at $13.92 RSI. I'd sell a little bit, man. I hope you ain't talking about buying it. Should be selling something. If you're talking about buying this, you're a dumbass. I hope that's not the case. You do not buy this. You watch it now and let it come back in. Take some off and then let the rest ride, like my man said. You would never buy this. So when you see a big move like that, what do? You just start watching them. And you let them come in and then look at that sideways movement. Look at that stage 2 breakout right there. That's when you buy this stock right there. That's when you buy the stock. Now, the people that bought here, they made money. Even dumbasses make money. I would have called you a dumbass for buying here. But you made money. People say, well, I made money. Okay. I mean, dumb people get lucky. I mean, I don't know what to tell you. Like, you know, smart people make bad trade. Like, it's not an intelligence thing. I would have told you it's dumb. It worked this time. Most of the time, it doesn't work. And so if you have a strategy that just works sometimes, it's a terrible way to trade. I can't endorse it. So, but down here was the stage 2 breakout. This was perfect. Look. Stage 1, stage 2, stage 3, stage 4, stage 1, stage 2, and look at this run up. Jesus, that was beautiful. I hope you were in it. So DS is one I'm in. Too late for Netflix. No, stage 1, man. You could buy right here. So look at Netflix. Now, the RSI is not extreme. I don't like that. But if you go back and look, that's pretty common for Netflix. Look. It's pretty common that it doesn't go extreme. And this goes back and back and back and back. But Netflix is sitting right at a support level. This would be a good options play, to be honest. That way you don't tie up as much capital. You're right at a support level here. Anytime I tell someone it'd be a good options play, their next question is, what time frame? Aha. Now the dilemma of options. Time. That's why I don't like them that much. Only on certain things, because you have time element. There's your target. INOV. Yeah, I was watching this the other day. You need to make... I don't know the valuation on this stock, though, man. It's worth looking at, though, doing a little research on it. It's definitely a stage 1. And you can see them clear, right? It tried to make a run here. down. I like it. Mel, aren't you in Big C or Big, yeah, Big C. Big C. This is stage 2 breakout right here, man. Are you in this, Mel? Maybe she's on YouTube. Yeah, I'm in ET. Of course I am. It's in my buy and hold though, so I'm not selling any. So Mel's in that. Mel's in that. So I missed it. This is kind of like overstock. Why can I never talk this stock? You can still get in that one. I just got mad at myself for missing the stage 1, so I'm not in it. Space is on the move. Woo! Woo, woo, woo. Look at that. So this is an example of one that never got extreme, and yet we got in it. You know, I started buying right around in here. Why? Because the box had formed. The box had formed. A box is not one candle. A box is not 2 candles. If it's not on an extreme, I need to see a box, man. The next, so I start nibbling, and then as it progresses, I'll keep adding. You know, we added. There's the stage 2 breakout, pulls back a little bit. That's your last chance to add, and there goes the rocket ship. And there she goes. I mean, you're trading Intel. It doesn't move enough, to, in my opinion, to trade it. 72 RSI, yeah. So you guys know what to do on this. You guys know what to do. 72 RSI. So we hit our first target. Now we're hitting our second. So what would I do on this? I scale it back. Half a position. We can just let it keep going, right? We just let it keep going. Look at Groupon. Stopping right on time. So this is another one. We should be scaling it back. Don't scale it back too much. You want to let them run if they want to run, but you need money for the next trade, right? What's a good RSI? I don't know what you mean by good. We use the extremes, below 30 and above 70. You should get my book, man. Damn. I know, I was looking at True yesterday. I haven't pulled the trigger, man. Big C is the ticker. Big C. B-I-G-C. Not Biggie Smalls, man. Biggie C. Big C. Big Psych. Grub. Yeah, I like this setup. Can't buy it yet, though, man. It's too soon. Still at stage 4. Is right in there. It's too soon, though, man. Look, can't even get above the 5. Everything is pointing straight down. Look, this hasn't turned. Too soon for me, man. Too soon for me. But I'm a badass trader. You might not be. You might just be an okay trader. So if you're an okay trader, you could step in on this now. Said you're still waiting on the book. Send me an email, man. If it's been more than a week, you should have received it. Make sure you can. When I send you an email with the ebook, there's an address in there if you ordered the physical, and you got to confirm it. A lot of people don't bother to confirm it, and then they never get their book. And then they go, oh, I didn't notice that you run. No, yeah, fucking read, dude. And DVAX, man. DVAX, same old shit every day. It's moving up, though. We're in it. We're in it. OPK. About to rip. Apple. Come on, man. Apple is boring. Big giant stage one. Boring. What's my email? Click my bio link. And if you ordered the book, you should have got the ebook from me. Meso. Are you in Meso, Mel? Mel's been killing it. I think she's got 4 100%ers this month. 4 or 5. I've got 4. I got 4. I got about 6 50%ers. I mean, the market's been very generous to all of us, right? Yeah, so on this ping, you should just be nibbling. You should not be in no full position right around in here. You could add to it today, though. So you want to nibble, 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 and then on the breakout, buy, and then that's it. You're done buying. BBBY. That's a breakout. Bed Bath & Beyond. So all of these retailers are breaking out, right? Let me guess. Macy's. Woo, look at Macy's. Holy sheep shit. Overstock. Those are probably going to be good plays into the big C. These are all going to be good plays, man. Oh, man. Are we really talking about INO? Oh, INO. I keep getting onto this dude about that, and I'm thinking the other one. Yep. Look. So these biotechs, they all trade similar, right? So, yeah, low breakout, pulls back. SRNE, same thing. Low breakout, pulls back. OPK, same thing. Little breakout, pulls back. DVAX, little breakout. They're all doing the same. So these biotechs are getting ready to run. Yeah, it's a stage 2, bro. That is a stage 2 breakout. Today would be your last day to buy Big C, unless it goes a little lower. Then it. What do we got here? Stamp. You know my problem with this company, dude? They have one customer. Jesus. Like, or not one customer, one supplier. That's my fear. It is extreme. It is in a support zone. It is below the 200. I like the setup. It's right there, man. I like the setup, man. Yeah, but FE's in a fucking stage 4 decline still, man. Buy and hold, I mean, you could probably nibble at it. AYX. Yeah, this is one I've been buying. You see it's in the box. So I bought a little bit of this the other day, waiting on the breakout. Shit, I might buy some today. This one's going a lot higher. So target 140, 145. Loves to put in boxes. That one got a little hanky, but I'm in this AYX. Probably buy some more today. It's just a spendy stock. I'm not in it huge right now. I'm in it for like 10 or 12 shares. Do some research. I personally don't like that stamps.com, but the chart looks good. It does. I don't like how their customer is the post office. I just don't like that. I mean, there's nothing about T, man. What are we doing? T's, this is just, it's nothing to do with T. AMBO, what do we got going on there? Breakout. Broke out big, too. So these are a dilemma. See, I love these stocks where when you see these big moves, don't buy this. Put it on your watch list. If you look over here, look, I got a shit called watching. That's where I put those in. And I go scan it every day. And you get these sell-offs, then it starts to go sideways, and your MACD rolls and you buy it. Like, shit ain't complicated. You don't buy this. You wait for the sell-off, and then you buy it. And it'll run up. And we know it's prone to popping. Look at it. It's done it a bunch of times. If you look, it's done it a bunch of times. So it'll probably do it again. Yeah, it's hard to buy a 16% pop, but on some of these stocks, you ain't got no choice. Like, that's a stage 2 break. So you could buy it here or add to your position, and that would be it. Once it runs, I'm done. Oh, he's talking Tesla. Fuck Tesla. Let's see. Tesla's going straight up, though. That was a pretty good breakout right here. And then it broke the box. I mean, look, there's your clear buy signal. Really, it was here. Gone straight up. Look. Money flow works on stocks I don't even like. Look at that. How about that? Money flow works on everything, man. Everything. It works on everything. Look at that. Broke the box. Up we go. I'd be taking some gains. But a stock like Tesla, maybe you don't take that many. This thing likes to run. It'll run overbought for a while. So, you know, as you trade a stock all the time, look at the breakouts here. Look at it. It's pretty easy to trade. You know, the hard part on Tesla is when to take some off, because it'll run extreme for a minute. You know, that's just the way it works, man. Just the way it works. What are some of the others? Polo's down 3%. Yeah, now let's have a little conversation about these. Now, I have this ability, because I trade with other people and talk with a lot of people, that I'm connected into the Force, like in Star Wars. So at times I can feel a disturbance in the Force. You ever watch Yoda? He's like, I feel a disturbance in the Force. I get those feelings. I can feel it when people in my trading group are fucking up. I can just feel it. Like, I just know. I don't even need to ask. I can just feel it. And it's usually because it's stuff that I would have done. Dumb. So I feel a disturbance in the Force. And this was one of those stocks. Because it runs up so big, the greed glands come in. And you start thinking, oh, Jesus, I don't want to give this back, man. I've made 200%. I want to keep all this money. And then you say, fuck the strategy. I'm going to sell all these shares. And then you feel smart because it pulled back to here. And you're like, man, good thing I sold. But all you did was ruin your trading strategy. Now you're a loser because you didn't have any faith and you didn't follow it. I can feel that when people do that, man. So you shouldn't have sold this. You should have sold some when we hit our target, and you should have sold some on the RSI. And the reason we're selling, if you follow the strategy, is so when it does this, it's no big deal. You don't need to panic. You don't need to worry. You already took half of it off. So this little pullback is on half the shares that you had down here. That's the money flow. Now, if you don't trade it correctly, yeah, then you're going to get all fucked up. So we had our first target, and then we had an RSI target. Sell, sell. And now we can let it do its thing. It's still above the 5-day. This is where it should be. Now, if it continues sideways, then that changes. We go into a stage 3 and this rolls over, then we sell a little more, and then we sell out. The reason I say this is if you do that strategy of, oh my God, then you'll miss the stocks that I will catch them that go from $3 to $50. And you just don't catch them, man. So careful of that. I could feel that, though, that people were not doing it and not telling me. Sometimes I'll do confessional time where, like, just tell me the dumb shit you did. I won't be mad. You'll trade better if you just get it out sometimes. You'll feel better. Like Catholics, they go to confessional and you just admit, like, man, I shouldn't have done that. Let's see. I do this to myself a lot, though. Yeah, of course it's breaking out. This is a new one that I got in. And yesterday I had people calling me on this. They were like, dude, why'd you buy this? Because I'm smart? Like, I don't know if you've noticed, I pick a lot of winners. Like sometimes I get it wrong, don't misunderstand me, but usually when I'm wrong, I ultimately end up being right. Because I don't just willy-nilly buy stocks. Like I spend fucking hours. So if you get a text from me and I say, I'm buying this stock, could just rest assured I spent hours reading analyst reports, looking at their website. I go look at their stuff. Sometimes I actually go to the store. I order like Roku. I ordered a Roku and put it on my TV. Like believe me, if I send you a text or say buy this, I've marinated on that company. I have no doubt it's going up. That doesn't mean I'm always right, but I have no doubt that what I'm doing is good. Now, have I gotten that wrong? Yeah. And usually it's not me. Usually some crazy shit will happen. Like you'll buy it and nobody knows this. The next day, the company decides to issue new shares and it drops 15%. And you're like, fuck. That doesn't change all your analysis. It doesn't change all of that, but it does hurt, right? Now, I didn't pick this stock. One of you guys gave me this stock and I went and started reading on it. And I was like, whoa, I like this stock. And I liked it because I could see the boxes. Look at that. Look how clean these are. So when I start seeing clean boxes, that gets me excited, man. I'm like, whoa. So, and look, the breakouts. And I'm like, whoa. So now I start doing fundamental research and I start realizing, wow, a lot of analysts have $90 targets on this. Whoa. And look, it's breaking out. Whoa. See how it's just start putting all that together, right? Just being open to the universe, man. Yeah, so hopefully, but this is another one that I had a disturbance in the force that I texted this out yesterday, and I don't think many people bought it. I can usually tell, I can feel. I really can. I can feel it. But sometimes you just can't. Like you can't. I trade a lot. You're not going to be able to buy all the trades that I buy. Sometimes, like you're just not going to be able to. This is why it's important to be selling into the like space. Like so, when I sell space today, I'm gonna go in and I'm gonna sell 1/5 of space. I'm probably gonna roll that money into CGGG or CHGG. So I'm rolling it forward, and I may not get. Sometimes I don't get a full position, but I will buy at least one share on a breakout just so I stay in the repetition. So like if a breakout happens and I don't have the money to buy it, sometimes I'll literally transfer $30 just to go through the process of staying on top of what I teach, you know. You can't get added to the text, bro. You got to follow the rabbit hole, man. If you get the book, it'll walk you through it, man. And if you get on my newsletter, it'll take you through it. We might not want you in the text. Like a lot of people, we have a Discord group where we hang out. A lot of people on my text are not in it though. If you come in here, you know, these are people in our trade group and these guys are watching stocks all day. A lot of good traders. So if you come over here, like we got stage 1 buys, people are tracking them like we're doing here. They're putting in tickers. So these guys are trading stocks that are up, you know, they're moving around. That's what they do. You know, they're trading some that I'm not trading. That's fine. Obviously everybody can trade whatever they want to trade. So I just put out what I'm trading. You can do what you want to do with it. And the reason I do that isn't necessarily that you trade with me. It's just, meaning I don't want it. Here's what I don't want. I don't want people that are complete dipshits, don't understand the system, and they're just blindly buying what I'm buying. That's not the whole point. The whole point was to give people an example of how to trade the money flow. And then as you get good, you don't even need me. Now, you might want to get them just because I find good stocks and then you're trading with me. But then you don't need a text from me to tell you, sell this. Like if I have to tell someone to sell this, I really don't want them in the group, man. Because that's not what we're doing. You don't need me to text you and say, sell space. Now, sometimes I do, but sometimes I don't. Why? You should know. Like, why do I got to tell you that? That's the whole point of the book. So to get in the group, everyone has to have the book. Why? So we're all on the same page, you know? And if we're all on the same page, then I don't need to tell you sell on 72. You know that, like, you know. Plus we're hitting a previous high, which is a obvious sell point, right? So I shouldn't need to tell anyone on this, sell this. I will, you know, when I do, I'll text it out, but I'll usually wait until I'm doing something else too. So a certain way, thinking in a certain way. Exactly. So as you go through, you'll see the way I'm trading and talking and do Instagram, and it's all around that book, The Science of Getting Rich. Like all of the 17 principles. And I'll end with this. We're just babbling now. It does help you trade better if you're around other people. Now, if you come in our group and you say dumb shit and do like, oh, well, I'm buying it and you're doing, I'm going to call you out because I don't, the point of it isn't for you to trade your way. You can, just don't tell me about it. You know what I mean? Like there's no need, because it just confuses people trying to trade our strategy if you're in there trying to day trade. So if you want to day trade, go hang out with day traders. Then you won't have me calling you a dummy. Let's see. Let's go to, see all these books I have now? You guys should have most of them. These are all my books you can get. So if you go to Instagram, yeah, man, don't give up on day trading, bro. Where's it at? Click on my thing here, go to profile. Day trading is stressful. I did it for a lot of years. I was pretty decent at it, to be honest. Pretty decent day trader, but it's hard to get rich day trading because you need to work. You need to make money. You need to do things, and that's now. If you come over here and click, if you go down, where's that? Right here. And you click on this. Go opt in on this. I'm fixing to start getting these videos going again. But there's other cool shit in there. I don't think it's going to let me now. Nah. Yeah, so the newsletter, let's see. I do some ramblings on Spotify. Where's it at? 10 Pillars of Success. I thought I had, I take it down? Oh, there it is. You can get to that book, The Science. I have a free, it's hard to read it on, not hard to read on Instagram, but you can get to it that way. And I have notes that I've done because I'm rewriting the book right now with my own life in the book. Like I bought this house around this, you know, thinking along these lines. So I put shit in there. It's kind of cool. The copyright's over on the book, so anybody can mess with the book, man. When to exit a trade at 100%. No, that's a terrible idea, bro. Vaughn, man. Bro, you've been, for as long as you've been following me, you should be a master trader of my strategy. We don't exit trades at 100%. We exit trades on targets and on RSI 72, and then we let them run. Come on, man. Yeah, 10 pillars are cool. I keep them on my board too. I stole most of those. RPAT, let's see. Oof. Oof. Man, that's a long ways from the 20. No, you don't take profits like that, man. I don't take profits based on percentages. I take it based on when it hits targets and RSIs, and then you let it run. I mean, it might go up 1,000%. Why take profit? $70 or $72. Either one's fine, man. My target is 70. When it hits 70, I look to sell some. Like Space just hit 72. It blew through 70. Now it's at 72. So I would sell some. The goal is 70. You're not going to get it exactly. It said not steal, compiled. In the market, we used to call it clipping files, clipping it. Yeah, American Airlines. Market's on fire again, I see. DS. Cool. HYLN. I never did get into that one, but it's a stage 2. It's creeping. It's creeping. I love the chart. It's beautiful. The only thing I didn't like about when I did the fundamental research, I don't see a reason that this thing is a $50 stock, but I could be totally wrong, and sometimes they do go up. But for me, I like to have a reason to believe they're going higher. Now, am I 100% on that? No. Beyond Meat is a weird one. You could be adding to Beyond Meat today. It's giving you another day. This thing's going higher. This is stage 2 breakout we're in. Let's see, Roku. Roku's my next dog. I'm going to name Roku. But look at Roku. Look what it does, man. Runs up. Look at these stages. Pulls back a little and then rips. Runs up. You know, we're at that 60. It's almost that time to ring the register. So my next dog will be named Roku. Jesus, man. This thing's almost doubled. You know you're a stock junkie if you name your dog ticker symbols. OBIX. Come on, man. Look at this. This is one we just got into. This is one I've been trading. I have a whole bunch of these little penny stocks. You can't trade these. When you get these sell-offs in these, I'm pretty convinced on some of these, if you've done your due diligence and it's a legitimate company that makes a legitimate product, I'm almost convinced you just got to hold them into these sell-offs, wait for the sideways, add, and then buy the breakouts. They're too hard to maneuver in and out of these little penny stocks, man. Boxel's one we're getting ready to, I think is about to rip. MLND is one we're in, I think is about to rip. DS was one that's already ripping. I think there were some others, weren't there, Mel? Let's see. I don't know, I'm in like 10 of these little, for me, they're like options plays, you know? I put $1,000 in some of these small little companies. I'll add on the breakouts. I might downsize them from time to time, but trying to move in and out of them with a pure money flow strategy is really tough. Just because the moves are so volatile, you know? Solo was one we were building forever. I mean, look how sideways this went forever. Tried to break, pull back, break, and then finally it just broke, you know? Boxel Watt is another one that I'm trying to trade. And look at this shit. It goes up 18% one day, down 18% the next, and now we're at $2. I'm in this stock. I like this stock. I think it's a $5 stock. They're a real company, make a real product. They're a legitimate business. But look how volatile it is. So these are almost like options plays, man. Like you just buy it, fuck it, hope it pops. And when it does, take some off on the RSI, man. I mean, you could try to pure trade them, but it's tough, man. So I try to limit these. You don't want a whole portfolio. I mean, unless that's your specialty. Now, that's a different conversation. And I was thinking about this last night of trying to maintain a list of 10 or 20 penny stocks that I think at any given moment could double. But then it's just more shit I got to keep up with. Which if somebody in the Money Flow Trading Society needed a hobby, that would be a good hobby for you. Is to maintain that list for us. Hint, hint. Let's see. That would be a great hobby that I would greatly appreciate. Let's see. Yeah, it already popped though, man. That one's already popped. But look at that beautiful sideways. You know, once it went sideways, 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 I mean, you can just start buying these. That's what you're looking for. That's what you're looking for. VRM. Yep. Stage 1 for sure. Back in the box here. I like this, bro. Be ready on that pop. It tried right there. Vroom. Get ready on that. That's going to pop and go. Oh, shit. Brought up the 4-letter word. Fuck. I mean, BXRX. Let's see. It's breaking out, man. I just can't in good conscience tell people to buy it. in all fairness, I'm in it, okay? I'm in BXRX, and it hurt. This is one that just hurt us. But for everyone that hurt us, there's a bunch that helped us, right? But it is a 4-letter word. I'm in it, and I'm in DVAX, and I've been wrong on those two, but I'm in them, okay? I'm in a lot of others that have gone way up. Look at work. We're in work. We're in space. You know, we're in a lot of these. So I get a lot right. If you come in and trade with me and you just buy one here and one there, you could catch all the losers. I mean, so that's the problem with trading around someone else. Mel said, zip, not saying anything, but we make up for it. I think Mel's had 4 100%ers this month. So that makes up for it. But if you only took the loser and didn't take the 100%er, you're not going to be feeling very good, right? You're going to be like, fuck this guy and his stock picks. Ooh, work is off the charts here. Let this bad boy go. Yep. So the RSI is going to hit right at the target. I think our target is what, 32? So you know what to do today. If you're in the boot camp, we're in space, we're in work. You know, follow the rules. You don't even need to ask. I get people that ask, it's so weird to me, like it hits the target and they go, should we sell? Yes, it hit the target. You don't even need to ask, sell. Oh, a buyout, huh? Shit. So keep an eye on the target in case this thing pulls back on us. All right, man. You guys are great. I like CRM. I wish I wouldn't have got out of that like a dummy, and now it's pulling back. So that's good news. Shit. Oh, somebody's saying, okay, I got you. CRM, Salesforce may be buying work. No, I did not say buy DVAX. I'm in DVAX. Work was yours, wasn't it, Mel? She just wanted to make sure that you guys knew that. It was yours. It was your pick. You're right. And it trades pretty well. There was the last rip, ran up. I'll give Mel credit for this. They paused it, huh? Fuck. Well, hopefully it keeps going up. So be ready to ring the register on that. I know, Mel's in here flexing. Oh, that's funny. That's funny. Yeah, if you're good at picking 100%ers, we'd love to have you in our group. For sure. Matter of fact, you can call me on the phone any day you want. If you're known for picking stocks like that. I have a couple buddies that work on Wall Street. And, you know, if they call, I answer the phone, as you can imagine. Probably be adding to AYX today. Yeah, it made up for BXRX all perfectly. David said, I guess I better call you now, GP. Well, shit, hit me on the text when you got 100%ers. I might take credit for them, though. Oh, came over from YouTube to tell Mel thanks. Somebody said home. Yeah, you're past the breakout point. It's on the move, though. But for me, that's a little past the breakout point. I'd rather wait and catch it, maybe pull back. But to me, I couldn't buy it there. It's just me personally. Should I sell work already? No, $32 is the target. Oh, did they open it back up? Woo! Holy sheep shit. So, yeah, don't sell all of this, but now is a good time to sell like 1/5. Take a little profit. So, yep, it's up big now. So I better get off the phone so I can do that. And, boy, this made my morning. This was fun, huh? Ain't that fun? Is CRM getting dumped, though? Not really. This could be a good spot to take a position in CRM now that we're talking about it. Oh, my God, it just keeps going. Jesus, maybe we get greedy and wait a minute here. All right, you guys see, yeah, CHDG is another one I'm adding to today. So I think that's a boot camp trade, and you don't even need to ask. You know, if it goes above the 20, that's stage 2 breakout. You know what to do. So, all right, guys, be good. Yeah, that INOV, that's on my list to check it, to research it. To be honest, I don't know the fundamentals, but I like that chart, dude, for real. Sell 50% of work. Nah, I mean, if you got a smaller account, for me, I try to sell in increments of 1/5, okay? So that I can ride it up. If you have a smaller account, then yeah, because you're going to need money for other trades, right? So yeah, the bigger your account, the more you can scale out. Does that make sense? The smaller your account, you need money. So take your money and, you know, that way we can find other trades, like maybe sell some work and add to CHGG. They halted work again? Shit. All right, guys, later. They're just going to keep stopping it. All right, guys. Good.